Just initially want you to give us some reaction to those numbers. Are they pleasing, and where do you go from here?
Thanks, Paul, and good morning. They're very pleasing. They're ahead of where we expected to be at the end of the first quarter. Most important for us is that we are banking a lot of money for every ounce we're producing. $871 per ounce we produced this quarter. We put in the bank as a margin, and that's really important to us, ensuring that we keep our margins high, our costs low, and the growth opportunities are very important to us as well, but they're organic growth opportunities and are going to be great for our shareholders.
So you've got cash on hand. You're looking for growth opportunities. Are you able to give us some idea of the sorts of opportunities you're looking at? And I'll give you the example of Newcrest returning to the Toronto Stock Exchange. Do you see any benefits for a Canadian or a US listing?
Not for Evolution at this stage. I've had experience with secondary listings. It's difficult to get liquidity in them, we found. So we're happy to have an Australian listing, strong support from global shareholders. But that organic growth for us is coming from the Cal operation, which is in New South Wales, an underground opportunity that we'll be developing to take production up to over 350,000 ounces of low-cost gold. And Red Lake, which we acquired earlier this year, has really proved to be a transformation opportunity for us. And over the next few years, we're expecting to grow from the current kind of 120,000 ounces of relatively high-cost production at this stage to between 300,000 and 500,000 ounces of low-cost production. So strong organic growth, and organic growth is always the best growth.
What about growth when it comes to assets? Will you see an extension of your asset base in North America beyond the Red Lake acquisition in Canada?
We'd love to, Sherry. We're always looking for opportunities, but we've been very strong in our discipline about only doing things which improve the quality of our portfolio and also are accretive to our shareholders. So in a high gold price environment, that means that a lot of the investors and industry is sort of supporting consolidation and growth for growth's sake. We're kind of on the other side of the ledger saying, yeah, we're all supportive of growth. We're looking for opportunities, but only where they make real sense for our shareholders.
Talking about gold prices, how critical is the U.S. presidential election to the immediate outlook for prices? Of course, there are some expectations that it could be a messy election.
Yeah, I was just reflecting, waiting to come on air, that I've probably been appearing on this show for, I don't know, about the last 15 years. And you'd have to say, as probably a lot of gold companies have said on the show recently, that the environment for gold is probably the best it's been in those 15 years. Whoever the president of the United States is, it is an environment which has been amplified by the severity of the COVID pandemic. Lots of fiscal, monetary policies required to address these issues, and then a whole lot of geopolitical tensions which overlay that. So regrettably, in some ways, the outlook for the gold price is incredibly positive.
Yeah, the outlook is positive, but recently we've just seen it stuck in the range. We've got a chart up right now that indicates that at $1,904 an ounce, not really looking to break out strongly in either direction. What do you see as the key catalyst being for gold right now?
Look, I think everyone's waiting for the U.S. election results. Then they seem to be talking about a fiscal program which is not a matter of if but when in the U.S., which will be a very significant program. And look, gold has had a very strong run in the last 12 to 24 months. It maybe needs a bit of a breather to maintain that upward momentum going forward. It may be a slightly overtraded opportunity at the moment. So I don't know, a little bit of a reset and taking a breath over here, I don't think is a bad thing. The factors that generally influence the gold price are very strong at the moment. And again, I'd repeat what I've said to investors for many years, that at Evolution, whilst we are very pleased that the gold price is high, we focused on building a business that can be strong through the cycle. And that's why when good times are occurring like it is today, we're banking lots of cash, but we're building a business that can sustain itself whatever the cycle.
I know you've said in the past that the US dollar is down about 85% relative to gold over the past 20 years. What's your outlook for the greenback?
It's got to go even weaker, I'd say, because the amount of money that needs to be printed is going to be significant, and that's going to be a drag on the dollar. And the only currency that you cannot print is gold. So, it is unfortunately a case of governments needing to print this money to get themselves and their populations into a more growth-oriented environment. But it is expensive. And it is creating a lot of debt, and it is printing a lot of money. So I think fiat currencies generally are on the decline against a hard asset like gold.
And just finally, Jake, you also mine for small amounts of silver, and we know that silver prices have been sort of stuck in a range as well, trading not only as a precious metal, but also it has some industrial metal qualities, right? So what will be the key driver for silver, and where do you see prices going?
Yeah, so silver is a relatively small byproduct for us. It generally follows the gold price. I know that when the gold price goes up, silver investors get very excited, but I think it's going to track the gold price. A more important byproduct for us is copper, and there we produce about 15% of our revenue is copper, and obviously the price going up over there has been very helpful.